Rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. If this is your first time on my channel, welcome. If you are a returning subscriber, welcome back. I am so glad that you guys decided to come and watch one of my videos today. I have so many quick videos for beginners, or if you are just trying to sharpen your strategy, and they're organized by playlist, so you can head over to my playlist tab and check that out to see if you can find more content to help you. And I look forward to continuing to create content for the rest of the year and into 2025 to help everybody become an independent and profitable trader. Now, in today's quick video, we are going to be on Tradelocker, which is a trading platform. It has an awesome interface, and it's good for beginners or seasoned traders alike. If you need more information about Tradelocker, you can find it down below in the description box. Before I get started, if you want access to Tradelocker, you have to find a broker that actually hosts this platform. And once you find one, you can create your demo and live accounts. Today, I'm going to be showing you guys how to use the break of structure strategy by using free tools on Tradelocker. I don't have the replay feature on Tradelocker right now, but I can still give you guys some examples and you can go back and back test it. So what you will notice is that the market is always going to be going up and down, no matter which time frame you're looking on. Right now, this is the hour time frame. That means that the frequency at which these candles are forming, one is forming every hour. So the market is always going to be going up and down. Now, your job as a trader is to determine where you should buy and where you should sell, where you should set your take profit so that you can exit the market with money, and where you should set your stop loss so that you can manage your risk. Now, the breakup structure strategy works on every time frame, and it is exactly what it sounds like. Once the structure that you see has changed, you know that the market is going in a different direction. So the market can either be going up, right? And you'll notice a lot of green candles. This is known as an uptrend or a bullish market. Or the market can be going down, right? As we see with these candles, you'll see a lot of red candles. This is known as a selling or a downtrend or a bearish market. Now, if the market isn't doing either one of those things, it's known as consolidation. That means the market is trapped in a range. So if the market is trapped in a range, where it's going to sell at becomes predictable, right? And where it's going to buy at also becomes predictable. So you can definitely trade the range, but it gets a little bit tricky once the market breaks structure. Um, you could have the potential to lose that trade, right? Unless you're using the break of structure strategy where once you see that the market has broken out of that range, right? If it breaks out of that range on the downside, most likely the market is going to continue to go down because that structure that was familiar is now unfamiliar, right? So if it was to break structure on the downside, you would want to set your take profit, right, at a previous low. So here we have a low. And if we would have set our take profit there, it would have been hit. If you would have had a TP2 at a previous low, right? Because you got to go back in the past, it also would have been hit. All because you waited for the structure to break on the downside. Now, this also works for buyers as well. Let's just say the market is coming off of a downtrend, and then you see it's consolidating. It bought here, and then it sold here, right? For at least 3 hours. It bought back at the same support area, but then structure was broken, right? All we had to do was wait for this candle to close, see that it broke structure, and then the market went up. And then we just used these previous highs as our TPs, right? And we can see that we would have secured profit in that trade. So it's really just a matter of patience. It's really just a matter of patience. And we can try to see if we can catch a good example in real time because we do see that the market has been consolidating, right? Now, if we were to enter this trade for a sell, of course, we can't see the whole trade play out, but if we enter this trade for a sell, right, then we open our trade panel, right? We're going to see if this trade moves into profit since structure was broken. Let me use the actual lines because Tradelocker has a lot of amazing tools. They have all the same great tools as TradingView, right? So we got a resistance there. We had the resistance there on the previous candle, right? Now we see structure was broken on the downside. And if we look at our trade on the bottom, we can see we are actually in profit, right? Right? It's not a lot, but the market is going to continue to move down. And you would want to set your take profit at a previous low, right? So that's about 50 pips that could be secured. And you would want to set your stop loss above the last high, right? So that's how you use the breakup structure strategy on Tradelocker. You can do this on your mobile app as well. But if you like a bigger screen, you can do this on your laptop or your tablet or whatever device you have that works for you. Now, if you do want more videos like this, make sure you do subscribe to the channel. If it was helpful, go ahead and drop a 7 in the chat below. And yeah, if you guys want to connect with me outside of YouTube, you can find all of my information down below in the description box. But that's really all I have for you guys today. Until next time, rich friends.